Hello, this is Tom Cloud. I'm doing a special report for SRS Rocco. It's been a while and the world has really changed. The uncertainty of what's out there in the world is mind-boggling. I get calls every day. People just don't know what to do, where to turn. How's it going to come out? Are we going to have a former president indicted? We're going to have a president impeached? I mean, things that I can't answer except to say the uncertainty and the investment side of it is picking up at rates I've never seen in 47 years of doing this when I started this little company back in 1976. But anyway, first thing up next week is the Federal Reserve. They're coming out and announcing where they're going to hike rates 50 basis points, 25 basis points, and some people believe nothing. But inflation is still over 6%. And remember, when you see the government say inflation is going down 15%, they're just saying it's going down from 7.2 to 6.2 for that 1 month. It has nothing to do with the next month or the month after. So the inflation rate is still very, very, very high and very costly. If you get a Social Security check, you know what I'm talking about, because the way they've upped it, because of the inflation index that has to be met. So we look at it and say, if the Fed raises rates next week, then will it put us into a tailspin in the economy, into a recession? Because the rates are just so high, it slows inflation, but it also slows the economy. Or will they just say, no, we're going to not raise rates, and if they do, then inflation goes up as we see money, the velocity of money going through, which churns and makes more money coming through. We look at the biggest problem coming up, and that is the balanced budget. There's no such thing. But the budget, just think last year we brought in $5.2 trillion, the government did, and they spent over $7 trillion for the biggest, in the history of the United States, the biggest deficit. Now we're still trying to get the 7.2 to spend, but now they're saying they're going to raise the taxes to get $1 trillion or more, and it kicks in over years. But we know never once in the history of America has any of these deficit reductions worked. They mean absolutely nothing, except try to get you to think for a few days what they're saying is right. But it's not. This can only end badly. There's no other way it's going to end but badly. We've talked about banks are driving gold. I'll tell you a story, a real short one. A client calls, I want you to meet with a friend of mine. I meet with him. Last year, he lost 22% in his portfolio. Everything he had except his real estate was in stocks and bonds, and he lost 22%. Gold went up 1.5%. So the difference in there is 23% he would have made if he just had a little bit percentage in gold. Now here we are, and we watched gold now go up this year 9%. Stock market, I think 1%. And it's going to be like this. It's not just last year and this year. You need to move before all the chaos hits it. And I mean, we're going to have a lot. We've now got the talk of the petrocurrency coming to an end. Just think, it seems like yesterday when Henry Kissinger went to Saudi Arabia and said, we'll protect you if you'll give us oil. And of course, that's what has happened. Oil has been denominated in dollars. But now we see India and Russia breaking away, and we think it's going to start more and more to where eventually, meaning months or a year or two, there is no more United States petrol. When that happens, we have no way, because it's like a floating loan. If you're the one watching trillions of dollars go through your system every day, at any given day you could take out, billions of dollars. But it's going like a ticker tape. So we know that that's going to end. It's not going to end well for the U.S. dollar. When it will, I don't know. But I do know the uncertainty that we face today has never been seen in the history of America, or the uncertainty of going to war back in the 1940s. That's how far out we are. So watch that and watch the indexes as gold and silver continue to rocket. I would get into it as quickly as I can if you haven't. Steve St. Angelo did an excellent job at SRS looking at 5 of the biggest known companies in the country. We're by far the cheapest, by far. Just ask Steve if you don't believe me. But we're going to continue to give you service. Dan Scoggins has been with me 25 plus years. My daughter's got a PhD from Chapel Hill, North Carolina, is back from a 10-year working in Colorado, and she's working with us daily. And we're excited to help people. That's what I feel that I've done, is make people aware out there that instead of trying to make money, yes, I've done well and will continue to do well, but that's not what's important. It's where I put my money, generational money, that goes to the next generation, my 2 children and my 4 grandchildren. So this is what you look at, because there's money being lost in the stock and bond market, and that's only going to pick up. That's only going to pick up. So what do? You buy insurance. Now let's get to that real quickly. Also talking to a client a few weeks ago, totally different person, totally different part of the country. He says, I have spent millions of dollars on insurance, life insurance, car insurance, boat insurance, second home insurance, every kind of insurance you can think of. He said, I've never had a claim. And he said, when you told me what you said, the reason I wanted gold immediately, it's the best insurance policy in the history of the world. I say you buy gold at $2,000 an ounce, and in 3 years it's worth $1,900 an ounce. So you lost 3% on the gold, but you had insurance against all this chaos, all this money printing going not only in the U.S., but other places around the world. So you look at it, and you've got to have confidence in what you're doing, because if you just sit there and think you're going to get well in the stock market, imagine to me that money managers out there, gold should be the top of their list in this cycle right now. Not say, well, we missed gold, but we're way ahead in stocks. It's going to go down a little more, but some days it's going to take off. What a poor excuse to be a money manager than to tell a client what I just said. Now, how about bail in, bail out? More calls and more emails about that than any other subject the last few weeks. We see the picture of Joe Biden in 2009 on the committee as a U.S. Senator, arguing and fighting and saying, we're never, ever going to bail out banks again. We do not want to bail out banks. We're not going to do it. And look what has happened. We see what happens at Silicon Valley Bank and the Signature Bank. And all of a sudden, he just takes care of all of his cronies and all these banks, and he's supposed to be bailing in. They're not supposed to bail out anybody. The government's not. They don't have the money. You can't bail out something. They're signing more IOUs. They're printing more money. You can't do this. I mean, it's terrible. It's going to be bail-ins. Remember what happened in Cyprus 7 or 8 years ago. And I knew a man that had a company there. He lost 52% because they bailed in and took money from current investors and made it theirs because there's no place else they could go to get it. And FDIC took over these banks, and they have 3% assets to cover what they have insured. People, you better head to the exits and get what you want out in gold and silver while you can, because it's going to go much higher. I mean, it's skyrocketing now, but it's even going to go higher and higher. It's going to slow down. It's not going to keep going up 9% every 2.5 months, but it is going to keep going up, in my opinion. But here's the key. What happens when the next 186 banks that were announced, and you can still read the article on kitco.com unless it's been removed, but 186 banks right this minute don't pass the stress test that they put in back in 2009 when they were saying we would never bail a bank out in the U.S. again. And we're already up to our own tricks. And the public doesn't care because they don't want to lose the money. But what's funny is most of them wouldn't lose it because they don't have 250,000 insured. It's the ones that are tens of millions of dollars that would lose it, the ones that would be the ones who would lose it. Nobody deserves to lose it. It makes no sense. But sit down because it's going to be a roller coaster, and we want to bring this special report to you and hope that you'll reach out to us. Our number at Cloud Hard Assets and Cloud is to come and call 800-247-2812 and talk to Dan or Catherine or myself. Once again, that's 800-247-2812. The biggest thing going on in our business are people my age, baby boomers retiring, taking their 401k and turning it into 2 IRAs, one for hard assets, gold and silver, platinum, palladium, and then one for stocks and bonds. So right now, if you're rolling out and you can now self-manage your own IRAs, that's what I would recommend. Do 2. Ever how much you want in the gold and silver and precious metals one, and ever how much you want in the stock and bond one. And put it over there. And then when you want to park your stocks and bonds, you park it in the money markets, but just be sure you get government security money markets. Certainly there's a lot of problems. Things could happen, but right now that still is the safest thing is the government-backed treasury bills or treasury bonds. One last thought as we leave this special is we saw the inverted curve that I got 20 or 30 calls about 3 or 4 weeks ago. When a 10-year government bond, you would get 3.2% if you took a 10-year bond. If you took a 2-year, they were paying 4.77. It was inverted 1.7%. To get a 2-year bond as compared to a 10-year bond, they would pay you more for the short money because they are desperate. They are desperate. We've seen that inverted curve 3 times since I've been in this business. Only 3 times. If you've seen the shorter term get bigger interest rates than the longer term instruments. And that's just putting off time because they don't have a clue what they're doing. They do not have a clue. So hopefully you'll take and diversify a little bit further, have confidence in what you're doing. You're making generational movements right now. I think it's very important, and we just hope if we can help you to get in touch. Keep tuned with Steve because he's doing an incredible job keeping you updated on the cost of this stuff. And like I said, just keep watching it and what's happening in oil and what's going to happen as we continue to see this government change their mind about different kinds of fuel and realizing maybe electricity is not the answer for that. So anyway, hopefully you'll get in touch with us with a special report for SRS Rocco and Steve St. Angelo. This is Tom Cloud checking out.